I mean, I think it has to be high enough to incentivize domestic mining. That's
Okay.
really, to me, what it's all about. Silver is found in nature in a form called epithermal. Your skin is epidermis, right near the surface. So the big deposits were exploited and found a long time ago. So when you realize that only about 20% of all the silver that came to the market last year, about 170 million ounces, came from primary silver mining. The rest of it is the majority of it comes from byproduct mining of lead, copper, or zinc. And so these companies, number one, have no incentive to look for silver. They just stumble across it. And so in order to find silver in North America, you would have to dig deeper and with silver price being in the crapper for so many years, there wasn't much in the way of exploration. And so in order to incentivize companies to make a profit when they're looking for silver and mining it, which takes time in and of itself just to get up to speed, there has to be a floor high enough in order to incentivize that. So what they're doing right now, in my mind, is shaking out the speculators, letting those wet banks in the United States that need to clean up their balance sheet get on sides. And even more so, if you are accumulating it and you are the U.S. and you are standing for delivery, knock the price down if you have the ability to do it and stand for delivery. I mean, you're just printing money anyway. You might as well make it easier to accumulate it. And the greater the volatility, the more you get, people who are investing in it and talking about it to shut up and look the other way. This is just a tool of misdirection, shall we say. The rules have not been rewritten. And I look at this as being something probably by the end of the year, we'll look back at it and see silver at much, much, much higher levels. I mean, I'm looking 10 days down the road to think, what's it going to look like? Are they trying to really knock the hell out of it leading up to that? Maybe. But what happens after China opens? Do we go right back up? What happens if there's more delivery than the registered category can really handle, or we knock down the majority of the registered silver? I just think this is one of these times where, you're going to have to hang on tight, is all I'm saying, because nothing's changed at all.
According to Andy Schectman, the silver market is under extreme stress as registered inventory of 90 million ounces faces potential delivery demands far exceeding supply. He warns that refiners are shut down, hedging costs have skyrocketed, and big money is quietly accumulating physical metal at suppressed prices before a major move higher. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
The market stays calm until it doesn't. So when if even 20% of that silver stands for delivery, that's 50 million ounces with a 90 million ounce registered category. It's putting serious stress on the market. And, you see things like the Bloomberg headline last week, which ran cover for the paper smash. And these idiots, incentivize the force index selling and add that to the margin hikes and the way that the algos are dumping when this starts to roll. They say Russia is going back on the dollar system. And in 10 seconds, $3.4 trillion worth of metal gets evaporated in gains as everything dumps. And then, a couple of days later, Russia says, we're on record saying we're not going back to the dollar system. So Bloomberg pumped the opposite narrative and allowed a lot of these big players that are off sides, meaning they have too much of a short position, to get on sides, to cover exposure. So nothing's changed. In fact, it's just desperation at the 12th hour here by the big players. So, yeah, and if you look at the way the previous bull markets went in this industry in 74 up to 1980, and then also the 2011, you experience large pullbacks before the big move happens. And so this is normal. It's shaking out all of the speculation, if you will, and transferring the metal to very strong hands right now. So yeah, I see nothing that's changed. If anything, I just see a market that was built by banks that trade credit, not metal. And real demand is beginning to show up in places like Shanghai. Real price discovery is shifting there. with a $10 spread between the West and Shanghai right now, this leaves New York and London chasing. And as long as the Western paper market stays in many respects disconnected to Shanghai, then you'll continue to see silver get pulled out of the West and sent to where it's valued over there. And that's what is happening. A lot of people say, well, what about the what's it called? The VAT tax, which is about 13%. That's true, but it's on the its onus is on the recipient of the metal when the metal leaves the Shanghai exchange. So if JP Morgan sends 50 million ounces of silver at a $10 premium and makes all $500 million, they're not paying the VAT tax. It's the recipient when the metal leaves the Shanghai exchange. It's on them. So they're paying a $10 premium plus a VAT tax. That goes to show how much they value silver over the Western paper price. So no, nothing's changed. And I just think that it's going to be very volatile. And the refiners, with the continual increase in margin costs and the rising price of silver, for the last few months has shut down every refinery because they're getting margin called. If they have 50 million in inventory that they've paid the public, they have to hedge 50 million. In other words, they sell short. And so they're market neutral, but it takes so much time to process what they're refining that they're not even breaking it down or melting it down yet before they're margin called. And so it shut down a massive source of liquidity. The small dealers like your local coin shops who don't hedge, if they take in 100 grand of silver eagles and the price of silver falls by $8 like we've seen, these big moves up 8, down 8, which we never would have dreamed of, right? I remember telling Kevin, who works for me, that you will see days of multiple dollar increases. And he's like, well, it never moves up more than $1. Well, true. Now we are. And I think we'll see that even to a much greater extent as real price discovery comes into play. But these refiners were margin called, shut down. And the small companies, small dealers who don't hedge, if you buy it and pay spot and it falls by $8 on 100,000 worth of silver and 1,000 ounces, you're down $8,000. You're not going to get that back. You make a fraction of that when you sell silver. And so the point of it is that the small dealers who don't hedge have to be way back a spot. The dealers that are hedging, a week or two before Christmas, if we typically have 2 million ounces of silver in a warehouse and we hedge it with futures contracts, a few weeks before Christmas, it was about $17,000 to hedge 5,000 ounces to buy a contract, one futures contract, 5,000 ounces. Now it's almost 50,000. The cost has gone up so much that even the big companies like ourselves, if you don't have 50 million bucks in your margin account, you're not holding a big inventory. And that's just silver. What about gold and platinum? You have to hedge it. Well, the prices continue to go higher on the margin account, which has forced all the speculators out of COMEX, but it's really did a number on this industry for right now, where premiums are very disconnected. They're high buy prices and low bid prices. I've never seen this in 36 years. Never, ever, nothing like it. It's just a weird time. But you can see the desperation that they are using to slow the speculative rise by knocking down or raising margins so high that it knocks out a lot of the even big traders that were using margin. They just can't afford to continue to post higher and higher margin requirements. So they sell and get out, and selling begets selling. Well, the big money standing for delivery for the past 16 months, there you get yippee, and they stand for give it to me and I'll pay cash. I'm not using margin, and they'll take it at a 30-40% discount from where it was just a few months ago. So yes, nothing's changed except the volatility will get higher, the desperation will become more acute. And in order to see this one through, you're going to have to hang on tight because it will be bumpy, and the bull is going to try every chance it gets to throw you off its back. Hang on if you believe in it, because I think nothing, to your point, nothing has changed at all. You have the former IMF deputy director and ex-People's Bank of China deputy governor. His name was Zhu Min, and he just came out and said that the global trust in the U.S. dollar is slipping, and it's a top risk this year. And he cites that the dollar share of global forex reserves has fallen to just about 55% from 70 in years past. And the dollar's drop is to the benefit of gold, the euro, and the yuan as they are rising. And he cites it as a direct signal that the markets are diversifying away from the dollar. He also went on to say that Fed rate cuts are not optional, that they're a key tool to steady markets and confidence. And look, this is a situation where, the dollar system is based on confidence, Jared, and the confidence is gone in many ways. And so on one hand, you look at what China is doing. They just told their large banks to stop loading up on U.S. Treasuries, in fact, to trim exposure on them. They are starting to treat U.S. government debt or our bonds like it's a concentration risk, not the ultimate safe haven that we've always been told. And they're speeding up their exit from the dollar and de-risking the dollar system. I think that's something from a primary standpoint that people need to understand. When you talk about, what's going on with the silver market, yeah, we knew that this was going to happen. I'll get to that in 1 second. I wanted to talk about also David Einhorn, the billionaire who thinks gold is already on its way to becoming the world's ultimate reserve asset, that it's starting to replace the treasuries. You're getting guys like Ray Dalio and now David Einhorn saying these things out loud. He cites the central bank buying, as we've talked about forever, and that almost 80% of reserve managers see that gold will be a higher share of reserves 5 years from now. So the macro side of things still looks very good. And when you talk about what's going on with silver, they had to try and do this. We're 10 days away, Jared, from first notice day on the March silver contract. And people need to understand what this means. It's interesting with junk silver. Now, I've never would have expected this in my entire career. This goes to show that we are in a period of time where weirdness happens everywhere. Go back to 2020. It's been weird ever since. And, during the pandemic, for 4 years, nothing performed better than junk silver other than Silver Eagles. Nothing. Would have paid you $9, $10 over spot for as much as you would sell us. Now you're getting back a spot. And that is because, the refiners are all shut down because they can't hedge because they're getting margin called and they're backed up. The small dealers are freaked out because of the volatility if they don't hedge, and the big dealers will buy it. But because of the cost of hedging and because I can buy it elsewhere for less, the bids are awful. That will change. These are anomalies in price. And if someone said to me, I got unlimited time frame, I want the best value, you buy pre-65 silver at spot or below spot, I've never seen that in 36 years where you can, get as much as you want at spot or below. And on a retail level, never. And so, will we see things go back to normal? I believe very much so we will. But you look at anyone who's really, really been successful in investing, you do things when they're out of favor. Look at David Bateman. People would have said, you're out of your fucking mind, David, to put that much money into silver. And he beat everybody, right? So the point of it is that that's how success is accomplished. By buying low and selling high, buying when there's blood in the streets. Interview Rick Roll, he's a good buddy of mine. He'll tell you the most money he ever made is when buying things when people said he was crazy. And, you have to buy things when they're out of favor if you really want outsized potential. Well, I will tell you, in 36 years, I've never seen junk silver like this, ever. And when the refiners get back to, run back to speed, look, at very most you're going to get, if you bring it to a refiner, the least you should get is 99% of melt value.